What's going on, guys? In this video, we're going to be talking about the one and only ETF that you will ever need to hold on to. It's not the S&P 500, it's not the NASDAQ, and it is definitely not the Dow Jones Index. It is the Vanguard Total Index Fund, or the ticker is VTI. Now, some of you may be asking, do you need a Vanguard account to hold on to it? You don't. I don't have Vanguard, I have TD Ameritrade, and I'm able to hold on to the VTI in not only my IRA, but my 401k and my regular brokerage account. So as long as you're using some big brokerage account, whether it be TD Ameritrade, Charles Schwab, Robinhood, you name it, there's a very high chance that you will be able to invest into the VTI. There's a few big reasons why I like the VTI better than the S&P 500, which we're going to jump on my computer and I'm going to show you in a couple of seconds. But before we even get into that, some of you may not know exactly what an index fund is. So an exchange traded fund is a basket of stocks. It's not just one individual stock like Tesla or Google where they come out with some bad earnings and they could drop 20%. That actually happened to Netflix today, so my portfolio is hurting a little bit because of that. But what's nice about an index fund or an exchange traded fund is because it's made up of usually hundreds, if not thousands of different stocks, you don't even need to worry about it. You don't need to monitor it. You don't need to worry about when is a good time to buy and sell if one stock is too overvalued, because you are so diverse and so exposed to the overall market. As long as the economy's doing good, then your portfolio is also doing well. Now, yeah, when the economy's doing bad, it will go down, but that's okay. You're gonna have both a bunch of winners and a bunch of losers within that ETF, whether we're in a recession or if we're in a bull run. And the coolest part about ETFs, whether it be hundreds or thousands of stocks, you may think, well, I can't afford that many. I can't afford hundreds of stocks. I could hardly afford Tesla. Well, that's the really cool part about exchange traded funds. The VTI, which is made up of, is only a couple of $100 while I'm recording this. And here we are on the computer. This is on Seeking Alpha. We're on the premium version so we could see all of the grades and we can really get into the details of the ratings, which there is a link in the description to get 50% off of Seeking Alpha Premium. So I would definitely check that out if I were you. But you can see right here, this is the Vanguard Total Stock Market ETF. It is only $225 to own every single stock in America. And I'm not talking about just the 500 biggest stocks like the S&P 500. This is every stock. So we could really dig into this and check out, the dividends that it gives, the data and all of that good stuff. But before that, I want to compare the VTI to the S&P 500 just to show you guys why I like it better. First thing, and pretty much for a decent amount of you, this is the only information you need to know to jump onto the VTI instead of the S&P 500, which, by the way, none of this is financial advice. It is all for education and entertainment purposes only. Do your own research. Here is the VTI over the course of the past 20 years. We have seen a 331% increase. Here is the S&P 500. We have only seen a 290% increase. So over the long term, the VTI has performed better than the S&P 500. I know for some of you, that's all you need to know, and you can close out this video. But before that, smash that like button and have a good day. But for the rest of you that want to know exactly why it's performing better over the long run than the S&P 500, well, let's look at the makeup of the ETF. So here's the VTI. We're back on Seeking Alpha, and here's how it's split up. You can see a lot of it is heavily into tech stocks. That's just because tech stocks are what's really big right now. But then we got a lot of healthcare, financials. I don't need to go over all this, but let's scroll down. If you guys didn't believe me, here it is, 4,143 holdings. It is every single stock in America. If we jump over to the S&P 500, so here's the holdings breakdown for the S&P 500. It says there's only 507 holdings, only the 500 biggest companies in America. So there's a lot of smaller companies that can easily appreciate 50, 60, 100% in a year that's not in the S&P 500, so you're not getting that kind of appreciation from that stock. And before I show you something that might blow your mind, if you take a look, this is the VTI, look at the little circle, and I'm going to jump between the VTI and the S&P 500. You can see the S&P 500 is a little bit more concentrated. It has more in the technology sector, 26.56. Meanwhile, the VTI only has 26.10. And that's just because it has to hold all 4,000 plus stocks as opposed to the S&P 500, but its breakdown is very similar to the S&P 500. You can see the top 10 holdings are gonna be pretty much the same, if not exactly the same. Yeah, the top 10 holdings are exactly the same. Apple, Microsoft, Amazon, Alphabet, Tesla, Alphabet again, Meta, Nvidia, Berkshire Hathaway, and United Healthcare Group. So if we see how much are the top 10 holdings for the Vanguard, it only makes up 24%. For the S&P 500, it is almost 30%. So there's 5% more exposure to the top 10 stocks for the S&P 500. So there's a lot of little guys that aren't included that we just aren't getting those kind of gains within this ETF. Perfect example is Tesla. Tesla has had an amazing run over the past couple of years, but it wasn't added into the S&P 500 until December 21st, 2020. If we look at Tesla's chart, this is where it was added into the S&P 500. We could just do some quick charting right here. Since it was added into the S&P 500, which was a little over 1 year ago, it has gone up 52%. So the S&P 500 has been able to enjoy that 52% appreciation from Tesla. But if we go from IPO, when it was $7, all the way up until before it was added, that's 8,838% appreciation. So the S&P 500 didn't get to see any of that appreciation until Tesla was added back in 2020. The VTI, on the other hand, was able to enjoy all that appreciation the entire ride up, and then even after it was added to the S&P 500. It's still in the Vanguard Total Index Fund, so it's still getting all of that appreciation. So after my little convincing, or at least my conviction on why I like the VTI better than the S&P, let's dig into some more stuff and take a look at the index fund to see if it's maybe a good time for you to invest in it or not. So we're back on TradingView, and you can see over the past couple of weeks, we have really had a pretty decent correction. If we go off the top all the way down to where we are, we've gone down about 7.5%, a little more than 7.5%, and I still think there's room to go. We could probably continue to drop, but I'm no psychic. I have no clue what could happen in the future. We could bounce here. So my recommendation, which is pretty much my recommendation for almost anything, is dollar cost average. You can't tell if the stock is gonna go up, down, sideways, but if you dollar cost average into the stock market, and if you have just maybe you're buying every single month at whatever price point over the long term, these little targets represent you buying. So let me just put these all on. There, let's say, every single first of the month or maybe the last of the month, you throw in whatever you can. As long as you're dollar cost averaging, you can see over the long run. And if we need to go zoom out, if you zoom out, you can see over the long run, it is going up, especially because we've been in a very nice bull market over the past 12 years. You can see in 2008, here's the Great Recession, but all stocks went down. So if we were to measure this right here, its max drawdown was almost 60%, but then you can see it is clearly seeing some really nice returns after the fact. Another thing I'd like to point out is the VTI does give a dividend. It's not the biggest dividend, it's 1.29%, but still that's nice because that's added on top of its average appreciation. But overall, the VTI is my favorite ETF because of the diversity that it has. If you know me, you know that my regular portfolio is only made up of individual stocks, which yes, I know that's very risky. It's high concentration, high risk, high reward, all that good stuff. But when it comes to my retirement accounts, things that I'm not going to touch for 30 or 40 years, I put most of my money into the VTI because whatever's going to happen over the next couple of decades, I have no clue. Maybe tech stocks won't be the big winners in the next 10 or 20 years, and it might be some other sector that the S&P 500 doesn't have too much exposure to right now. So if that does happen and a different sector becomes the new big tech-like sector, well, I'm already invested in it in the very, very early stages when the market cap is hardly anything within the VTI. But I don't want to keep this video too long. Now you know why the VTI is my favorite ETF, and I hope you took away something from this video. But guys, let me know in the comments, what is your favorite ETF to invest in? Did you know about the VTI before this video? Are you a fan of ETFs, or you just like to stick to individual stocks? Again, let me know in the comments below. But guys, as always, I will see you in the next one.